Hey, good morning, everybody. It's time for Trader Talk in today's market. My name is Brent Moores, and let's look at the markets. Let's see what's happening and what some things on the horizon here coming up. And I'm just glad to see a lot of you here, a lot of familiar names and some names I'm not so familiar with. Either way, I just want you to feel welcome. And if you happen to be watching this on a recording, hey, we're glad for that too. I'm joined alongside Brett Crowther, who's helping me out in the chat today. So as you have questions, I'll do my best to kind of keep up with the questions in the chat. And between Brett and myself, we'll try and get your questions answered. But it's just good to see some familiar faces here. You can follow either of us on X at Brent Moore CS, at Brett Crowther CS. On X, we post additional content throughout the week. And it's just a good way to follow and get some additional information on the markets if you're interested in the markets. Now, before we get too far into this, let me just mention a few things here. One, the information today is for general informational purposes only. It's not an individual recommendation or personalized investment advice. And the paper money application is provided for educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. And past performance is no guarantee of future results. All investing involves the risk of loss, including the potential, in the case of a stock, you could lose the entirety of a stock position there. There we go. Just remember that as we go through these, we'll be looking at a lot of different stocks today, and we'll be talking about them. They're not recommendations there. Okay? All right, let's head on over and bring up the Thinkorswim platform. What are we going to do today? What we're going to do is we're going to start off with the indices, as we always do in here. And then what we're going to do is we're going to, sorry, one quick sec here. Things aren't cooperating. Then what we'll do is we'll look at some major market movers. What's happening in the market? We are in earnings season, everybody. So let's see some stocks that are moving on earnings, some stocks that have earnings upcoming, because that's certainly a big story. There's various indexes out there that we're going to look at, and we can look at some sectors as well, just to get an overall picture of the market. So here's the S&P 500. You can see we dipped below that 20-day moving average, which we've really held. Well, I have a 6-month chart up here for basically the entirety of the chart. This morning, how are we opening up? We're actually opening up today. Nice little bounce today, looks like, up about 0.7% at the open, eking above the 20-day moving average. So, we've seen this in the past where the trend has been strong. We've dipped below the 20-day moving average, and then we've kind of promptly, jumped back up. So, it seems like things are going well. We are on the government shutdown. I think, what are we on, day 13 or something? I can't remember what day we're on that government shutdown. And so far, it doesn't seem to be wearing down too hard. Day 15 of the government shutdown there. So, a little bit of a roller coaster, up one day, down the next. If we look at the intraday chart on this SPX and just kind of look at some morning levels here on this, let me just pull up the one-day chart and let me pull up some pivot points on that chart just so we can look and see. Let me zoom in here a little bit. You can see the purple line is the pivot point. This is R1 right here. Potential resistance here. We've come out of the blocks pretty strong today. Creeping up, we'll see. I mean, these would be levels that some traders would use, but remember, the opening level is, in addition to the pivot points, the opening level right there can act as kind of a support level there, or a resistance level if we're on the opposite side of that. So, Degging Viking said government is shut down. Okay. Yeah, the market doesn't seem to be, it seems to be shrugging it off. I mean, I've got to believe at some point that it would place a drag on the market. However, government shutdowns in the past, assuming they've been resolved within a reasonable amount of time, haven't really tended to drag the market down too much there. So that's where we are. But this right now, we'd probably consider this to be kind of a support level right here. And if we were to break below this, that would probably be a pretty good technical signal on the market. It would be breaking below the lows that we hit here and here. It would also be breaking below that 50-day moving average. That could signal something a little bit different there. Now, this is the S&P 500. Remember, the S&P 500, about 10% of the stocks in the S&P 500 represent 40% of the market cap, and it's a market cap weighted index. So you're getting a disproportionate representation from those 10%. So let's look at this. Let's look at a breadth indicator. This is the percentage of stocks that are above the S&P 500, above the 50-day moving average in the S&P 500. It's kind of right at 50%, and you can see that percentage has gone down there. So this is 50% right there. This is the percent of stocks that are above their 50%, above their 50-day moving average. 50% of stocks are right now. So that is, it's just showing that the rally, this strong rally, in terms of everything, some of the bigger stocks are affecting that more. I did a video on X the other day looking at beta. And remember, beta is a measure of how much stocks move in relationship to the S&P 500. So higher beta means when things are going up, they tend to outperform. A correlation between that and market cap, so how big the companies are. And so if some of those higher beta stocks are moving, they tend to move up even more and affect the index even more, which helps to explain why this is looking so strong right now. Okay. Now, let's look at the NDX. This is the NASDAQ. The NASDAQ looks honestly almost the same. So I'm not going to dwell. I'm not going to spend too much time on that NASDAQ chart right there. But if I look at this support level, probably about here on the support level, up about 0.9% this morning on that NDX, above that 20-day moving average again. So I think pretty much most of what I said on the SPX is on the is probably applicable on the NDX here, there on that. So we do see some difference though on the Russell 2000 small caps. Notice we hit an all-time high a few days ago on the NDX. We hit an all-time high several days ago on the SPX, but when we look at the Russell 2000 small caps, today we are at an all-time high right now on small caps. So ding, 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 that's kind of a big thing for small caps. Now, those of you who have followed us know that small caps have underperformed for quite some time now. And so it's catching up. Why are small caps doing better? Well, there may be different explanations. One possible explanation is, hey, small caps tend to benefit from lowering interest rates. This is the 10-year yield right here on this. And the 10-year yield, I wouldn't worry too much about any one day's movement, but it's creeping down right around that 4% level. Remember, you got to divide that by 10. Just a little trick. If you ever want to do that and actually put a mathematical operation here and divide something, you can always do that on your ticker symbol here. You can click on it. I want to replace it. Put in a little divisor, put in minus 10, divided by 10 if you want, and that gives you the 10-year yield rate there on that, in case you're interested there on that. And so that's probably kind of the key level, 4%. You know, psychologically, these round numbers can be impactful in the market, I think. But the key point is longer term rates have been going down, and these longer term rates, okay, not to be confused with the Fed funds rate, which the Fed directly controls, not on the long end of the curve here. And this can be, this is important because it can affect things such as mortgage rates, okay? And you guys all know how mortgage rates can certainly affect the economy. It can affect the housing market, but it can affect more than that. It also is pretty heavily tied to corporate debt, okay? And you can imagine if the cost of a company borrowing goes down, that can benefit the company. So when you go, hey, why would the market like to see the lower interest rates? Well, that's a big reason there. It also affects what discount rate we use in terms of projecting future cash flows and whatnot. So that helps out corporations. Now, if the 10-year, which is what we're looking at right here, isn't the same as the Fed funds rate, what controls the 10-year yield? Well, things such as inflation expectations control this. Why? Think about it. If you think inflation is going to go up or be high, you're less likely to want to buy bonds. If you're less likely to want to buy these treasury bonds and lock in this fixed return over an extended period of time, if there's less buying of those, it drives the price of those down. There's less demand on those. Well, if the price of the bond goes down, the yield goes up. So higher inflation tends to portend higher yields. Okay. Similarly, if the market if there's high expectations of high economic growth, hey, people are more likely to want to be in equities, not in bonds, and they're less likely to buy bonds, driving the price of bonds up, which drives the rates up. But in this case, we kind of have the opposite in this case. So we do have some lower yields on this. All right, so let's go and let's move on here, everybody, to the next items on our list, which just a FYI, if you are interested, we talked about looking at the equal weight SPX. You can also, there's other measures such as the number of new highs on the high stocks on the New York Stock Exchange. This would be better viewed on a line graph. If you ever get a graph like this, if you try and pull up, say, a mutual fund on a candle chart, and you get something like this, or an index, and you get kind of this like this, just realize if you go over and view it as a line chart instead of a candle chart, the viewing becomes a lot easier. There you can see where it is. So just other ways of coming up with that. Now, let's move on and look at some other potential asset classes here. And one that is in the markets and that gets a lot of talk is gold futures. So I'm going to look at gold futures here. And just by the way, there is a survey link in the chat. We always appreciate your feedback. We could read your comments. You can make suggestions on topics to cover, things like that. But here's gold. And let me just go back to our normal chart here. Gold, another all-time high, another day, another all-time high on gold. That's just kind of how it's been going lately. And so, I don't know when gold's going to turn around, but right now, trend traders are loving gold because the trend has been going up. That doesn't mean the trend is going to continue up, but right now, we just keep on seeing new all-time highs on the price of gold. Flight to safety, demand for gold versus maybe other countries are buying gold, other central banks are buying gold, just more demand for gold right now. Heck, you can get gold at Costco. And so a lot of people not only are using it to diversify their portfolios, but that's kind of always been a thing. But a lot of times people have like, well, I'm going to diversify my portfolio, but I don't really expect big returns out of gold. It's more of a safety feature. Well, right now, when people are looking at gold, they're going, hey, I'm getting great returns on gold, better returns on gold than most places. And therefore, a lot of traders have been buying gold. Now, at some point, you'd expect this to turn around. I don't know when that is, though. So that's gold. You can also look at things like silver. You get a similar story on silver right now, to be honest. There's silver. By the way, we're looking at future symbols, but we're not talking about trading futures today. We're just talking about what the price of these things are. But you can see the silver is taking off just like gold is. Little different story when you go to, those are kind of precious metals. Here's a pure kind of more industrial metal. Copper has been doing well, but, compared to the chart of gold and silver, not as well. This is largely tied to kind of global demand. And right now, there's some trade tensions kicking back up. We've seen this a little bit in the stock market the past few days, the increase in trade tensions between the US and China. President Trump said trade relations with China will all be fine. That's a quote, will all be fine. But he also said that China is not buying US soybeans, and that is an economically hostile act. So you kind of get both sides of the picture there, things that may calm the market a little bit, things that may not calm the market, put it that way. And we're seeing the VIX kick up as a result. We're getting up to close to 20 on the VIX. Now, I'm not going to talk about option trading right now, but just realize we do have option classes, and higher implied volatilities can be beneficial to some types of option trades. It can be detrimental to other types of option trades. But if you want to learn more, we do have a Getting Started with Options class, noon Tuesdays, that we teach. Also, if you want a little bit more of an advanced look at options, I teach a class on condors, calendars, and butterflies on 2 o'clock Eastern time on Fridays there. And we'll talk more about implied volatilities at that point. But right now, it doesn't matter whether you're an options trader or not. If you're a stock trader, stock traders will still look at this VIX as just kind of a measure of uncertainty on the market. Some people will call it kind of a fear gauge there on the market, and you can see that VIX going up a little bit there. Now, before we go to some other areas, well, let's look at a few other aspects of the market before we go to earnings, because earnings is a big topic this week. But while I'm looking at some commodities, let's continue with the commodities. Here is crude oil. The price of crude oil has been going down. That can be positive in some ways. That can help the inflation picture, not just for you and me, the consumer, but it helps companies and helps airlines, get to their jet fuel is going to be cheaper ultimately. And shipping can be cheaper ultimately. There's crude oil. You can see that going down. By the way, that's not the only crude symbol. That's not the only symbol there for oil. Especially in Europe, traders will look at Brent crude. So it's /BZ is a symbol on that. The trend is usually going to be the same on those, though. There's a strong correlation between the price of oil worldwide. Also, in terms of energy, if you look, oil isn't just crude oil, heating oil, okay? going down in price there. So HO, heating oil. And energy, again, isn't just oil. It can be things like natural gas. What's natural gas doing? A little bit of a different picture on natural gas. Actually, a little bit choppy, kind of going up like this. We'll see if we bounce off that 50-day moving average. A little bit more volatile on natural gas. Gary in the chat said mining is also cheaper, and that's a big thing. Especially when we talk about the overall energy picture. Okay, and the overall energy picture isn't just oil prices. We have nuclear, we have other energy sources, but AI economy, high energy demands, energy is kind of a key thing. That's why we look at it almost every morning here on Trader Talks, is we look at energy prices. We can look at individual sectors, and we're going to look at individual sectors here in a little bit. And that will be, we'll look at energy sector and see how that's doing, as well as the utility sector, which is highly, is very correlated there in that way as well. But right now, we have earnings season. And in fact, this morning, we had a couple companies come out with earnings, couple bigger name companies come out with earnings. Here's Bank of America. So at the beginning of earnings season, a lot of financial companies. Bank of America, obviously a big financial company. And, it'll be interesting to see in this earnings season how earnings hold up. Because remember, when we talk about market prices, if we just kind of consider the S&P 500, and people will often talk about market valuations. Usually when we're talking about valuations, we'll talk about earnings multiples. When we say earnings multiples, what we mean is the price to earnings ratio. The price of a stock, or the price of the accumulation of a bunch of stocks, in other words, the price of the index, as compared to the amount of earnings in that index. As this becomes a high value, people get a little bit nervous. Well, you'll hear people talking about market valuations being very high, or the market being frothy, or things like that. Well, what they're talking about is this PE ratio on the market. And well, the market keeps going up, right? We saw that on the S&P 500. Well, if the market keeps going up and earnings stays the same, that is very problematic. If earnings goes up at the same time, though, that the market goes up, that can help the valuation picture. Right now, last earnings season was actually fairly strong. The jury's still out on this earnings season. So it's not about in one stock, which we'll look at individual companies here. But when we look at these, the accumulation of the various earnings can help derive overall market valuations, and not just what an individual company is doing. But when we look at Bank of America, you can see the positive reaction. This is today. This is this morning. We're up 4% today. So if you're looking at potential trades, none of these are recommendations, but sometimes people will look at companies that just had earnings and go, hey, this is a fresh opportunity to reflect this. To consider this. We're fresh above the 20-day moving average. Nice bounce up on Bank of America. Another company that came out with earnings this morning was Abbott Labs. A different opposite picture here on Abbott. Here's Abbott, down about 3% now. We're off the low, so we'll see. I mean, this would probably be a kind of a key level, you'd think, on Abbott down here, right? We'll see how it goes. And on some of these, when we look at this, if you can look at, say, we'll do a 5-day, 5-minute chart here and then zoom in. So here's today. These are 5-minute candles. this is where we open today. Overnight session, we actually dipped a little bit. And this is just kind of a reminder, by the way, those overnight sessions can be quite volatile. We're going along, and of course, you can see this big movement is when their earnings, I think when people started to get a whiff of earnings there on this. But you can see the big, this is a 5-minute candle, 135 down to 126. Right before it was 121. But by the time we opened, we were right here. This would be kind of a key level here on this. Let me go and let's go back out here. Okay. So similarly, let's go to Morgan Stanley. Here's Morgan Stanley. These earnings came out. The timing was kind of weird. It wasn't right before morning, but it came out early between close and this morning, up 7%. So strong reaction from financials this morning. And over the past day, we had some others. Yesterday, we saw the big move up in Citigroup. Okay. Today, up a little bit, kind of more with the market, but nice bounce up on earnings. If you're interested in the full earnings picture, go to MarketWatch, go to Calendar. You can uncheck everything if you want, but check other than earnings. And I just have the S&P 100 here. You can change that to whatever you want. If you just leave it blank, you're going to get a lot of results, I'll tell you that. But you can see we've had others, including JP Morgan, Wells Fargo, BlackRock, so a lot of financial companies. Coming up here over the next few days, we have including USB and American Express. And if you go down the list, when do kind of some of the biggies come out? Here's Netflix, October 21st. So about a week, we have Netflix coming out. That's a big one. Tesla coming out in about a week. We're going to have those. And then if you go down a little further, then you're going to see Alphabet and Meta and Microsoft and companies like that, and Apple. So there we go. Let me go back to the charts here. So that's earnings, and that's kind of a big, obviously a big consideration there. Now, other things that can certainly affect the markets are upgrades and downgrades. NVIDIA was upgraded. These are potential market movers. Now, NVIDIA is the largest company in the world, so sometimes it doesn't move quite as much on an upgrade. Everybody's already following it. NVIDIA is up 1.3% today. HSBC upgraded NVIDIA to a buy from a hold with a price target of $320 from $200. $320, that's a big upgrade. The stock's at 182 right now. Okay. So, that's an interesting one there. What about other upgrades? That's the biggest name in terms of upgrades. Logitech got an upgrade. Do I have the ticker? There we go. Yeah, that's right. Got an upgrade, up 1.3%. The trend was really breaking down. We'll see if that rescues the trend here on this. Still have earnings coming out that can certainly affect things on this. But that was another upgrade here. And in terms of downgrades, again, not as big a name as like NVIDIA, but GE Vernova downgrade, company's still up. So downgrade doesn't seem to be that significant. Rothschild and Redburn downgraded GE Vernova to a sell from a neutral position with a $475 price target. That's down there. So we'll see there. Now, if you are interested at looking at some of these things, you can always go and use your watch lists. And on the watch list, if you pull up a watch list, you can see like under Lovers and losers. This is a question from Deepak. Where can you see upgrades and downgrades? In the lovers and losers list, there's analyst upgrades and analyst downgrades there. You can also, by the way, little tangent here, but I think this is an important page to use to consider. In addition to your personal watch list and these kind of just public lists, there's other things here, like top 10 of what companies are moving a lot today. If you want to see big movers, this is a place you can see big movers, both for the, to the upside or the downside here. Big volatility stocks. And keep in mind, if you go to top 10%, if you just go the biggest gainers, sometimes you get some smaller stocks on here. But, this can limit it to the NYSE or the NASDAQ, whatever, and do it that way. You can also look at individual industries and so on here. So just be aware and look at these. Feel free to use these watch lists over here, not just for your personal watch lists, but also for the just other ways of trying to find stocks. How do you find stocks? There's no one way. There's a lot of different ways, but a lot of people like to look at big movers to find stocks. Some traders will use a top-down analysis to find stocks. They'll start with sectors. So I have a list of sectors here. Here's today's performance on every sector, S&P, by the S&P 500 sectors. So there's 11 of them are up right now. You can see them all in the green. Well, it's a different story if you look at the last month. And I touched on this a couple days ago in this session of how utilities was just killing it in terms of sectors right now. We talked about energy demands with AI as possibly being a big contributing factor into the utility sector and why that's just absolutely outperforming other sectors over the past month. This is a month return. Also, lowering interest rates can certainly help utilities. And we saw the trend of interest rates earlier. Remember, why would lower interest rates help utilities? Let me give you a couple different reasons. One, utilities tend to be fairly debt-sensitive instruments, very, very debt-heavy. So if the cost of debt, that is the interest rate, goes down, utilities tend to benefit. Well, we've seen the trend of interest rates. They've been going down. Utilities benefiting. Number two, let's see what we were talking about. We're talking about why utilities would do better in a lower interest rate environment. Oh, think about why people buy utilities. One reason people buy utilities usually aren't the sexiest type sector, right? People will think of, the big movers as communication services or IT or something like that. People often use utilities as maybe more the conservative play in the portfolio, despite what the performance has been lately. Well, but what they do is they buy utilities because utilities often pay a little higher dividend, a little higher dividend yield. Well, if the competitive atmosphere of getting income, that is treasuries, is going down, in other words, interest rates are going down, that makes this as an income source more attractive for people. So just a couple reasons why utilities may be outperforming. Other companies that may be doing, or there are other sectors that may be doing well. Healthcare over the last month has been doing very well. Now, that brings to mind another company we didn't look at that just had earnings is Johnson & Johnson. And they came out, not a huge result here on this. Yesterday opened up, had a pretty big range yesterday, but the trend is continuing to go up. But going back to the healthcare sector, there you go. Now, I'm sorting this by monthly return. Some traders like to view comparison other ways, such as using relative strength. If I pull up the relative strength, the default on relative strength, by the way, is the S&P 500. That's what I have here. You can always change this. You can always change this. But we're going to stick with this SPX. This is, if the line is going down, I'm talking about the green line here. If it's going down, it is underperforming the S&P 500. Okay. Now remember, the S&P 500 isn't the average industry because it's weighted more heavily towards some of the bigger cap stocks there, and IT has a bigger representation in the SPX. But point being, if you want to compare to the SPX, if it's going down, it's worse. If it's going up, if it's sloping up, generally, it's outperforming. So you can use this as another way, the relative strength, to try and assess the performance. So I'm using the 1 month here. If you want to add a relative strength, it's just a study, it's a study just like any other study, like a moving average. It's just called relative strength. Okay, this list, this list right here is just a public list, folks. You can just go to public, you all have public S&P 500 sector indices, okay? That's what this list is. And these columns are public columns, except one you just got to tweak a little bit. If you click on customize, the first one is percent change. That's my first column there. Okay, percentage change. The second one is percentage change since, and I just changed it to 1 month right there. Okay, so you guys can all do that on your own if you want. So there's healthcare. Here's IT. Look at the strength of IT. Well, outperforming the S&P 500 as a whole. You can see that up 3.6% over the past month, but really over the past, this is a 6-month chart, outperforming significantly. And you can go down here and you can look at what are some of the laggards here. You know, communication services. Laggard, you can see that in the relative strength. Underperformer. Discretionary, going down 2%. Materials, going down the better part of 1%. So when you're finding stocks, we talked about you looking at maybe earnings as a potential way to find stocks, upgrades, downgrades as a potential way to look for new stocks. You can look at big movers. We discussed looking at big movers for that. You can do a top-down analysis. And so let's say you're looking at utilities, okay, and saying, well, look, utilities is hot. Doesn't mean it's going to stay hot, but utilities has been strong. I want to then find some utility stocks. You can then, if you want, do a scan looking at utility stocks. Okay? Or you can go and you can create your own list. Like I have a list of utilities that are just in the S&P 500. And then I can do the same type thing and I can look at these stocks that are in the S&P 500 utilities. Now, this is a list I created on my own. Okay? How did I create it? All I did was I went to Scan. I went to Stock Hacker. I said scan in S&P 500. I went to by industry. I went to utilities, all utilities, and that's it. I then scanned it. Okay, it gave me the results of stocks that are both in the S&P 500, in the utility sector, and then I saved it. Okay, just click on over here, and then you can save the scan query. And once you do that one, you can change it to by industry, go to real estate, okay, or whatever other industry you want. Select all real estate, redo the process, scan, save. It's going to take you 5 minutes to do that. And then you have a list of all 11 S&P 500 or S&P 100 sectors or whatever that you can look at. And then you can sort and go, hey, maybe I want to look at some of these companies here and see how they're doing and see if they're of interest to me for potential trades. That's a top-down analysis, folks, if you want to learn to do that there, okay? And so I've done that with all those. It just takes a few minutes. Once you save the scan, it automatically saves as one of your public watch lists. Okay, by the way, there. Now I'm just about out of time. Let me go and go back to our S&P, just as a reminder, S&P 500 sector indices. And we mentioned energy. Here's energy, okay? So energy and utilities, sometimes we confuse those two, but remember, they're different. And sometimes we confuse energy and oil prices. Well, they're different. And so you can look at these individually here, but what I'd say with energy, if we're looking at this chart here, probably kind of my line's going to be a little crooked because I'm just kind of freehanding it here, but probably kind of a key level there. We started to bounce off here. We'll see if that holds. If we break below that, that would probably be a key resistance break on that there. Okay. All right. I think I'm going to call it there, folks. Let me just double check and see if I missed any questions before we go. Just a reminder as I'm doing that, make sure you check out the Trader Talks channel on YouTube. That's how you don't miss these sessions that we teach here, okay? This session, other sessions. It's by subscribing. Just click on, if you haven't subscribed. If you already subscribed, don't click on it again. But if you're looking at a video on the screen on YouTube, look in the bottom right, and you haven't subscribed, it should give you the choice to subscribe to the channel there. Okay. Hey, Brett, thanks for helping me out with the questions. I appreciate that. And everybody, appreciate you for joining me. Okay. Coming up at 11 o'clock Eastern time, we have Trading Growth and Value Stocks. Check that one out. And remember, you can follow me and Brett on X, formerly known as Twitter, at Brent Moore CS, at Brett Crowther CS. And everybody, we'll see you later. Thanks for joining us. Bye-bye.